Good morning, this is Michael with Back to the Future Trading, and I want to talk to you about the integration of FLUX tools with non-time bars. So I was working with a customer earlier this week, and I really think he hit a wall in terms of understanding how to integrate the idea of trade timing with non-time bars. So this customer for years had been trading price action only, and he'd been doing that with a custom or a different style of bar called a RENKO bar. And so he really had a hard time getting through his head how you could incorporate a non-time bar like a RENKO bar or a tick bar or a range bar or a line break bar with this element of time, because none of those bars are suited to capture any element of, or any dimension rather, of time. And so he sort of had a meltdown, not really sure how to integrate the two different things. And it's understandable, because when you've abandoned the idea of timing for pure price action, it's hard to reintegrate those two thoughts. You sort of have this mixing oil and vinegar mental process. I use the imagery with him of the idea of a car that is automatic versus somebody who's used to driving stick shift. You're always wanting to rely on the one, even though incorporating the other would be far easier for you. So let's take a look, and I want to show you the process that I used with him, and I'm going to go through it with you here step by step. The trader traded the Emini S&P, very popular market, and very easy for us to analyze and get future projection times for. And so we worked together, and I asked him, what size brick do you use? And he came back and he said he uses a 4-tick RENKO brick. And that's fine. The other question that we asked was in relation to how many signals a day do you normally see? And we have the ability to overlay different time frames, so we can look at signals from a 1 minute, a 2 minute, a 3 minute, a 4 minute, a 5 minute, a 6 minute. And he determined that he wanted to see between 3 to 5 signals a day, and he said that's about as many moves as he was used to watching for in the Emini S&P, and that's fine. And so that helps us determine which time frame we're going to overlay on top of the RENKO bars. And then I walked him through the next step, and that was to say that the Emini S&P, when it comes to time cycles, doesn't follow its own time cycles. Meaning we don't look at ES histograms when we're really trying to nail down very accurate signals. The Emini S&P actually follows the timing patterns of two other markets very closely. One is crude futures, and the other is gold futures. And I explained that to him, and that's kind of hard for traders to get their heads around, the idea that the bigger market is following the timing of the smaller market. But in that case, we've really uncovered a pretty important pattern that you'll see here in a moment. And so that's kind of where we're at. We wanted to build a system that demonstrated this, and let me show you how we do that. The first thing we start with is a histogram analysis of gold futures. And here I've got two different studies. I've got a momentum study, as indicated by the histograms on the top panel of our NinjaTrader indicator list. And the bottom NinjaTrader indicator is the FLUX power zone, and that measures and analyzes trend. The dotted white line is where we are in time right now. So everything to the left of that white line is a forecast or a projection that either took place or it didn't. And everything to the right of the white line are times that we're watching in the future for probable bank moves as we arrive at those times. Now, I've set this chart up with a regular trading hour data session template. So the software is only looking for trades or signals rather between this 9:30 to 4 o'clock window. We're not incorporating any of the Globex or overnight session signals into the timing. And that was important for this trader because he only looks from the open of the market to the close. So no need to incorporate any other data. I am using a stochastic filter in this example, a D period 5, K period 7 stochastic filter from the timing analysis. And I've essentially left that filter near 0. So my high peak, low peak values, I'm seeing every little nook and cranny of the histogram that I can get my hands on there. And we're using a 2-week look back. We're not looking back any further than 2 weeks in the market. Same thing for the power zone, a 2-week look back with a 120 period SMA filter. So we've got a really nice trend filter analysis, and then up to the right, the momentum analysis also telling us what times to expect in the future as we move into next week. So now the challenge becomes putting these signals on a non-time frame bar. And so I'm going to stretch this over to the right and show you how we've built that chart to accommodate the non-time bar trader. So here I'm using a RENKO bar. This is the Logic Ultimate RENKO produced by Pure Logic at purelogictrading.com. And inside of my indicator list, I want you to see that I've brought the same studies from the other histogram chart onto this screen. I've taken the base instrument and I filled the panel, the parameter with GC space 04-17. So I'm using the same histogram times from the 10-minute gold study that we've put over to the right. This is my power zone trend analysis. Again, 2 max weeks, 120 period SMA. So it matches the histograms that we've just covered up. And then above that, I have the stochastic study, the 5 period D, 7 period K filter, plus or minus essentially 0, with again the gold histogram times being referenced from the other chart on a 10-minute time frame. Now we're going to talk about this 10-minute time frame here in a second because it's pretty critical to our analysis. These are the signals that were produced watching those movements or waiting for those times over the last several days in the Emini S&P. And right off the bat, you start to see that there's a very high occurrence of accuracy. That is to say, at the times where we were expecting certain patterns to occur, I want you to see as I move my cursor from left to right that in fact these markets, this market in particular, was following the 10-minute gold histogram chart. And we see that there are very distinct turns with the RENKO bars that you wouldn't ordinarily see with the time bars that we use, 5-minute, 10-minute bars and such, and so on rather. So we're definitely in the ballpark. We were able to construct a chart where this trader was able to see his 3 to 5 signals a day and get some really good indications as to what turns were coming up next in the market. And as we move back to the left, you'll see that the accuracy of those signals continues moving back into the several days prior to the ones we were studying with him. So part of the challenge, and I want to show you this here, this is really where a lot of traders get confused. Let's get rid of these arrows on the chart. Part of the challenge is helping people understand the nature of time in relation to a timeless analysis method like a RENKO chart. And so the key here is understanding the base time frame parameter. If you're using a RENKO bar, remember you've abandoned all dimensions of time and sacrificed all of the benefits that come from timing analysis to see a purified price action chart. But keep in mind that these bars, these RENKO bars, still have some correlation in time, meaning they took place over a period of time during the market. And so if you had used a 1-tick RENKO bar or a 2-tick RENKO bar, those bars would have formed faster. If you had used a 16-tick RENKO bar, you might have had maybe a quarter of as many bars in the market as we have here. So the size of the bar in some way implies the time that it took to form the bar. And one of the things that we can do is we can tune the base time frame we're analyzing and overlaying on top of the RENKO bar so that we have a good match. For example, if I turn this number all the way down to a 1 minute analysis, I'd like you to see how many dots appear on the chart. Okay, so in the case of our customer who was really struggling to understand this, you'll see that there are far too many signals for his taste, and it's really a confusing chart. While there are many more signals here at the dips and doodles and pullbacks, it would be almost impossible for him to make any kind of substantial analysis or act on any of those signals. But now watch if I go in the other direction. Watch if I change it from a 10-minute analysis to a 30-minute analysis. And you'll see that if we look at 30-minute histogram times, that there are far fewer signals on the chart. Now some of you may say, wow, that's even better than it was before. I really like that. And there's less signals, but wow, I could really act on those. That's fine. But you'll see the higher the time frame we overlay, the fewer signals that are appearing in the chart. And so it's important to remember that once you have a fixed RENKO or range or tick bar, we can tune the time frame, and there'll be a resonant time frame where the signals are just right. So watch as I drop this now from a 30-minute analysis to a 20-minute analysis. You'll see that the pivots start to fill in. There are more and more signals to reference. And then I can go and drop it from a 20 to a 15. And as I drop it from a 20 to a 15, I'm tuning it like the old radio dials before we had digital radio. And you're starting to see more signals coming in. And I can pull the chart in here so that you see more and more of the dots. And now as we drop it from a 15-minute to a 10-minute analysis, we get right in that golden zone. Right in that golden zone where the trader wanted, remember when we started, to see a certain number of signals. And so here we have an average of 1, 2, 3, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5. So we're right in the ballpark of the number of pivots he wanted to see. Now, if he wanted to get slightly more resolution, look, we could dip down a little bit, a minute at a time, and start to see that there are more signals than there were prior. But for the purposes of this demonstration, we'll keep a nice round number of 10 minutes. And that's easy when you start to look for those round number time frames. Okay, so once we've built the chart and we've saved the template, now we can just simply pair the two things side by side. We know that the next times are coming up to the right of the chart. We have them all ready for Monday and Tuesday and Wednesday and Thursday of next week. They're already locked in. And so as this white bar moves forward into the future, the RENKO bars will be moving forward into the future as well in pretty much lockstep. So these bars will be about 10-minute bars moving forward. And you can anticipate these selling pressure times above the zero line and buying pressure times below the zero line using this analysis. And so there's a lot of different trading techniques when using RENKO bars in terms of line break, trend line breaks, looking for double bottoms and tops, divergences. There's a whole slew of techniques, and you don't have to abandon those when you start using our software. In fact, the timing will tell you and confirm when the breaks, when the bottoms, when the divergences and tops and ABC patterns and Elliott waves are occurring, what times to be watching for those moves to occur. And so it's really not hard to incorporate a timeless bar with a timing analysis. It's a struggle for people who've not used timing signals in the past. And if you're up for it, if you're willing to take your trading to the next level and really study it, you'll find that overlaying the timing signals on your price action bars will really enhance your productivity in your analyses and allow you to look forward in the future versus sitting there reacting to every little movement in the bars. So quite a wonderful synergy between the two. If you found this video helpful, please make sure you link to this and share it with your friends. Subscribe, comment, like it down below. We put out these kinds of educational videos all the time, and I'd love for you to have the opportunity to see that moving forward. My name is Michael with BackToTheFutureTrading.com. Remember, the market you trade is not random. We can see the moves, the times the banks are planning to push the market like bullies up to 5 days in the future. And we're excited for you to take our video demo below and join us in our weekly webinars as we search and find and reveal those times for retail traders, taking our edges back from the banks. Take care, everyone.